Well, this is one of the first podcasts that we're doing on behalf of Mining Store. We're going to be basically talking about the market, what's been going on over the weekend. It's something that we want to continue doing every Monday just to give our audience a bit of an update, keep you guys in check with what's going on. So we'll jump straight into it. We've got Mitch, our head of research here. He's done a fair few points that we're going to cover, so he's going to give us a quick introduction to some of the points we're going to go over today.
So generally every Monday we just go over the fundamental news surrounding the market and what could potentially be impacting any price action, particularly on Bitcoin as the main cryptocurrency in the markets. There's a few things that have kind of happened over the last 5 to 7 days. We've seen Ethereum and alts suffer heavily in their price action. Terra 2.0 has been released off the back of the UST depegging and Luna Classic crashing. There's been some interesting movements in the futures, options and margin markets. And technically, we've got a lot of charts to show you all that are giving us different insights and different angles as to what we believe can happen from here. So we might as well dive into the fundamental side of things first. Terra 2.0 was released on the weekend. It launched early Saturday with freshly minted Luna tokens. It did actually peak at around $20 after launching and subsequently crashed to about $5 now after listing on Bybit, KuCoin and another number of other exchanges. So that'll be an interesting watch for the weeks to come. If Do Kwon can lift another peg off the ground, and whether he subsequently crashes the market again will remain something to be seen, but it'll still be a very interesting thing to keep an eye on for the weeks to come.
A lot of people were buying Luna in the millions, half millions. They wouldn't have been able to convert that at the $5, would they?
I'm not.
Post.
I'm not fully across the airdropping and what happened with
post.
post.
So if you had it prior, I think they could get 70% or something.
Yeah, and then I think the post crash buy if you bought was like 0.0000.
It's 0.002.
Yeah, it's about the tokens. So unfortunately, my 500,000 Luna hasn't been exchanged yet for my 0.01 Luna token.
So it was done pre the crash.
So they've done an airdrop. So they've allocated X amount to people who were in Luna pre-crash, post-crash, mid-crash.
Gotcha.
Yeah.
Now.
So it was like 35% pre-crash.
Yep.
10% after, and then the rest is between validators and whatnot.
Okay.
But out of the 1 billion, they've only airdropped 21 million.
Right. Okay.
Which, to be honest, it's only across
at least they're doing
4
something.
major exchanges.
Mm-hmm.
So there's not, a lot going on just yet. Hence why it's all got done.
I feel like that kind of news events kind of past it now. That kind of initial fear in the market, that's
definitely
that depegging of the stable coins kind of past it now. So I do feel like markets are looking to recover somewhat.
Definitely in the first week, I think like the biggest thing that had the market feared was one massive stablecoin's been depegged here.
Yeah.
What could happen? And we saw Tether go down to $94. Like that would have been disastrous if Tether had crashed anymore. So
I think it's just sad because like a lot of people that aren't familiar with even just crypto, I know that a lot of them were using stablecoins to use to get staking and stuff, and they don't even know the tech. But the problem with that is now you've got a lot of those retail investors that obviously really don't like crypto now.
It's created so much fun. Like my mother has absolutely zero clue about crypto, but even she knew about it.
Yeah.
So
I think it doesn't help with the additional pressure from things like banks and governments that want to create their own central currencies, and this is the perfect catalyst for them to say, well, this is why we should be able to create them and you shouldn't.
On the flip side, I think that's also what Cal was saying is it could have fast-tracked the cycle for us in crypto. I think.
Which it was needed a bit. There's a lot of the whole DeFi industry was fractionalized down to the dust. You know what I mean? So it needed a bit of a washout. Needed something like this to happen, and now we are where we are.
And what did Janet Yellen ask for regulation before the end of the year?
Yep.
So, surprise.
Yeah. There we go.
Kind of off the back of this whole Terra situation, we've continued to see kind of BTC and ETH kind of drop marginally but slowly week by week. ETH particularly last week, together with alts towards the end of the week, saw huge crashes on roughly May 27th. a move that caused over 520 million in liquidations, and that was actually upwards of 236 million in ETH alone, which was double of that of 125 million on Bitcoin futures that was liquidated. So it was a big week for alts. This included the futures of Stepan's GMT, the infamous walking earning token, that actually racked up 23 million in losses as a result of Chinese authorities who actually banned the gameplay of the popular Step to Earn protocol.
Surprise.
Yeah, surprise by the Chinese government. So that also extended to losses on Solana of 11 million, whilst metaverse-focused Sandbox, or Sand, which most of you would know it as 9 million in losses. So, yeah, there was more interesting losses to come from the alts over the weekend. We could probably expect that if BTC does continue to kind of consolidate in this descending triangle, that alts will ultimately bleed out a bit more if Bitcoin dominance continues to kind of accelerate, which it is at the moment, which we'll show you in a chart a bit later.
Just on that though, you know, with alts, a lot of them are down 80-90% already,
course,
you know, which typically does happen in the bear market. So you know, the majority of the pain has probably occurred. So
particularly if this is the bottom.
No, if we go down much further, you know, history would say we're kind of approaching the bottom of some sort. So.
I think technically, like, if we look at some of the more major alts, Polkadot, for example, you could still see 50% of its value coming down easily. You know, it's at $8-9. You could easily see it coming down in that $4 territory. But anything lower than that is pre-bull run prices. You know, pre-2020 bull run prices. So
we'll explain that a bit later, because it always comes back to the historical trend that BTC's yet to retrace its full 80% in a inverted commas bear market. We're currently only at 50 to 60%. So whilst the alts have bled, given the context of how this kind of bearish crash has been, slowly bleeding out, then you can probably expect in a few of the major alts to see a bit bigger of a drop, particularly ETH, and those ones like DOT. BNB still has some room to drop if we do consolidate a bit further. It's held up a bit better than the other alts in its full retracement over this cycle. And it'll definitely extend to a few others, you imagine. Like, we've seen Link as low as $6-7 now, which people probably didn't expect.
I'm kind of in the other camp slightly. I think we're going to see a bit of a bounce from these levels. Mainly to do with the stock market having a strong bounce Thursday, Friday last week and running higher. So if they kind of see a bit of a follow through,
which I'll actually talk about now, which is an interesting point, is we have discussed more often than not the correlation coefficient between the tech markets, particularly the Nasdaq, with BTC being so high, and they have followed each other recently. But this weekend, interesting enough, for about the first time in a while, we've seen a slight decouple. The Nasdaq actually was up 3.1% over the weekend, and Bitcoin's been down 3%. Now, decoupling with the stock market is actually kind of, in most traders' eyes in crypto, a good thing. They don't want to be coupled with the stock market. The issue is that when you obviously decouple from it, you want the stock market to go down and Bitcoin to go up, but the opposite's happened over the weekend. This isn't to infer that they're no longer following each other, but it's still a really interesting point, because it's the first time this year pretty much where the stock market's had a bit of a relief. We expected relief in Bitcoin, and it didn't ultimately come as much as we want. Although today we are probably up about 0.7% or close to 1%. So if we see a bit of a relief rally from here, good. If not, we'll have to keep a close eye on that to come for coming weeks, because if we do see a decoupling, then like I said, it's usually a favourable thing, because we don't want to just blindly follow other financial markets and stock markets. You want to be a bit independent, but at the same time, you don't want to decouple in a negative way where the stock markets kind of bounce from here and Bitcoin doesn't respond positively.
Well, all markets are correlated somewhat. You know, everyone thinks like cryptocurrencies are decent.
Money's got to go somewhere.
Yeah, exactly. You know, all markets are, whether they're inversely correlated or whatnot. But I think from a technical perspective, you know, looking at Bitcoin, rising channel, nice technical structure coming into play. Exactly the same on Ethereum as well. So we can see like a nice pitchfork coming into play, and it's providing a bit of support at the moment. So, you know, if the stock market's bounced higher, then we may see a bit of a relief rally at least.
Another important kind of macroeconomic thing to state as well is that the United States Commerce Department actually came out and said the personal savings rate has fallen to 4.4%, which is the lowest since 2008, GFC. So it probably indicates there, once again, like, there's worsening macroeconomic conditions, crypto being the most volatile and risky asset class, you know, people aren't likely to get their savings and throw it into this financial market currently with these conditions worldwide. So,
well, as messed up as it is, mate, like the Fed, there's a Fed governor came out, I think it was last week or the week before, and said if GDP shrinks, then the Fed may pause on the rate hike cycle going into September onwards. So we're going to see another 2 rate hikes, June and July. Then after that, they're going to start pausing, and it's going to take like a sit and wait approach. And the stock market likes that. So if the economy gets worse, the stock market actually goes up, which is pretty messed up.
Yeah. Well, I mean, like something just to recap on all of this, it just shows we're still in serious uncertainty. There's no direction in the market, and to our audience, you know, it's important to understand you shouldn't be trying to pick the market and make big plays in this time. You should be waiting for clear direction and having a clear strategy in place. Obviously, this being a public podcast, we won't give away all of our strategies, but we've got our strategy in place, so we don't have to worry about whether it goes up or down. Either way, you know, we benefit, and that's the position you want to be putting yourself in right now.
No, definitely, and the price coming down is only putting pressure on miners and their profitability as well. Like I think you know more about like the retail market and mining and how the retail market's getting squeezed.
I think.
Well, let's jump into talking about mining, looking at the network hash rate that we've got on here, and go for it, Theo.
Yeah, I think on Friday or Thursday it dropped by 10-15% overall, which if you're mining, you want to hear that sort of stuff because it just means that there's less competition, essentially. So hopefully that trend continues, but from a overall standpoint, what I'm seeing more or less is there's a lot more oil and gas publicly traded companies joining the Bitcoin space, which has pros and cons, but the pros being is what I'm reading and seeing is they're joining a lot of governing bodies for electricity infrastructure. Because I guess the view from people that don't know mining more or less think it's a bad thing, but in many ways Bitcoin mining is going to innovate in such a way that it's going to be a lot more beneficial for wasted gas and all of these other things that, you know, miners can be switched off at and diverted, the power can go in different ways. So there's all this innovation that's happening. And I guess with these oil and gas guys, they have got so many ties with all these governing bodies, which is always going to help legitimize the whole Bitcoin mining in general. So I see that as a good thing heading into the future. For us as a retail space, ideally right now, and I've been explaining this to a lot of my clients, is you know, if you bought miners from us, the best machines back in December, we couldn't sell you them. We were selling 76 terahash machines at, you know, Avalon's. That's all we could basically get, and the price of Bitcoin was at 50, 60k. Difference being now is we actually have options, and I've been telling people that, like, right now we can sell you some of the best miners on the planet, being S19s, S19J Pros, and many others. But point being is they've also reduced in price, which means obviously for a lot of retail people, they're a little bit reluctant to get in there. But what I'm finding is the quality of people that are coming through already have that long-term conviction. I don't have to convince them because of the fact that they just get, like, more or less, I think people will just understand the future prospect being sort of 5-10 years after the first halving, or the next one in 6 years' time. If you're already in place, you know, and you know, a lot of people speculate on the price being X amount of dollars, and you're already mining it, irrespective of market conditions, I think it could be a very good play.
Yeah, definitely. I think I'll comment on it as well. Like, it's similar to trading, right? Like, timing is everything in the market, and what a lot of people get sucked into is when Bitcoin's at, you know, $40,000-$60,000 and it's run up quickly, the mining returns go up. You know, we saw January, you know, maybe bit earlier, probably in 2021, we saw returns at $30-$40 a day. Yeah. But it doesn't last too long, and that's when the prices of miners are so expensive, right?
Yeah.
Like right now, S19Js back then, maybe we were selling them for about, you know, $20,000. They've come off $5,000 now. Could you have mined $5,000 worth of Bitcoin between now and then? No. Like, you're getting a massive discount on the price of the miner, which is half of the investment. So, you know, that's where we're seeing our bigger kind of miners starting to look at this as an opportunity and say, look, I'm happy to buy these miners which weren't even in stock at that time at a $5,000 discount and set up for the long term. So hard to do. It's not an easy thing to do when you're looking at the returns and trying to calculate dailies, but in the long term, it doesn't take much for Bitcoin's price to run up back to $40,000, $50,000, $60,000, returns are back up, and you got your miner at a much, much lower price. Plus, you've got a miner actually that's one of the best ones on the market, which won't be available when things come back run up.
With that big decrease in the hash rate, like it's definitely the retail market that are getting squeezed there at the moment. The guys mining at home, they're mining as a hobby. They can't claim their power as a tax deductible expense. So they're the ones that are coming offline. Probably your old gen models are going offline as well. So we're seeing this decrease in the hash rate, which is good for us miners that are online. But the majority of our clients from Miners Store, they're pretty safe in the facility. They know they can mine at cheap power. With Bitcoin coming down in price. So I guess it depends on how you're set up. But my bet is the bulk of this decrease in the hash rate is your retail clients that are mining at home, don't really know what they're doing, they're not set up correctly.
It'd be interesting to see if it comes off a lot more. I think we're in a different market than we were previously, where people see this long-term future. They understand it's not about daily returns. They're setting infrastructure up. There's still massive facilities of 50, 20, 100 megawatts, big facilities that are still buying miners right now. So hopefully it does come off a little bit. I'd definitely say the old generation miners would be starting to switch off now.
Yeah,
like
definitely.
50 terahash unders would be struggling. But we just have to see what happens with the hash rate.
It's a strange one because some people say the hash rate leads the market in Bitcoin, and some others say Bitcoin leads the hash rate. So whichever one it is, if Bitcoin comes down in price, for us that are left online, it's actually not a bad thing because the hash rate may come down a bit further, so we can pick up more Bitcoin.
The best time to mine, not in terms of the dollar value, but in terms of the amount of Bitcoin that you're getting.
Yeah, exactly right. So for us that are looking to sell in 4 or 5 years, it's not really a big deal if it comes down a bit further. I wouldn't mind if the hash rate dropped off a bit more, to be honest.
100%. Like I'm happy as a miner for Bitcoin's price to stay at this price, even lower.
Yeah,
I'm happy with that. I've been through many market cycles. I understand that this is a long-term thing. I'm never calculating daily returns. So if Bitcoin's price comes down to $10,000, some mining facilities will have to switch off. They can't pay. They've got loans. They've got infrastructure costs that retail miners don't have. They literally cannot pay their bills. So me sitting here is something more of a comfortable position where I'm just holding my Bitcoin for the next 3 or 4 years. If that network hash rate drops substantially, that's a massive bonus for us. So
yeah, nice. I guess it depends what the Fed does coming out of that as well. Next year, that's going to impact the crypto market, the stock market, and whatnot as well. But I guess where do you see the market going, boys?
Well, it's very tough to talk about the direction of the market. I guess another fundamental thing we have here, just to even push the further narrative about being such a grey area at the moment, is that options and margin trading is actually kind of working conversely at the moment. So margin traders are actually a lot more bullish at the moment. We do have a chart there, and what this essentially shows is that traders have been borrowing a lot more USD in Tether recently, and the ratio has actually increased from 13 to its current 20. And obviously this indicator shows that the higher the indicator, the more confident margin traders are with Bitcoin's price. Obviously, this isn't just a leading indicator of Bitcoin's positive price action. It just means funds at the moment are cheaper to borrow for people to enter the market. But conversely, the option markets are actually entering extreme fear. Ultimately, this metric turns positive when fear is prevalent because the protective put options premium is higher than the similar risk call options. Essentially, what's probably happened here with option traders and why they're fearful and margin traders aren't is probably can actually be put to the USD or UST collapse on May the 10th. Because here option traders probably took heavy losses as the stablecoin lost its peg, it probably reduced their risk appetite for BTC options. Yeah, of course. And as we explained here, the cost of borrowing USDT has dropped 3% per year on AVE and on compound. So this means traders are taking advantage of this low-cost leverage strategy, therefore increasing the USDT BTC margin lending ratio. So just another interesting kind of outside perspective on margin and options, and kind of showing that there's no real direction for either type of traders at the moment. But yeah, I think what we'll do now when discussing kind of what we see the direction of the market is we'll move on to some more technical factors. And the first one I wanted to bring up was just this general one we've discussed in prior meetings and mentioned in prior updates. I think we're approaching our 9th weekly red candle, is it?
Yeah,
we'd obviously never had 8 in history that we achieved last week. These two graphs here, charts I should say, they show our longest downtrend. So you've seen one in the past of 400 days. Sorry, just scroll slightly up, Tony, just so I can do that. Yeah. The next one was 364. The next one was 261. And now our fourth one's currently at 200. But in saying that, has it been our biggest major correction? You can probably say so because we've had 9 weekly red candles we've never had.
Yep.
But does this indicate that now our downturns and our downtrends are shortening in periods? Because we've gone from 400 to 350 to 250. This is 200. A lot of the general consensus right now is in the next coming weeks, in the next month, 2 months. Are we seeing this bottom officially bottoming out? Are we seeing 20 to 22k bottoming out? Yeah, it's a pretty good indicator that we're at a bottom. And if you just go to that next chart below, this actually lines up each of those exact ones with RSI. So you see RSI down the bottom, absolutely bottoming out each time the bottom of these long, 200, 400 day corrections have happened. We showed you with the fear and greed index on our market analysis update, this lining up really well, that we were bottoming out on fear and greed, we're bottoming out on RSI, and these are really usually pretty good indicators of when the bearish side of the cycle is pretty nearing to closing.
Well, if you're looking at the monthly chart and the RSI as well, that's a big indicator, definitely. When you're looking at technical, the longer the time frame, the stronger the stronger the indication. So that's a major one.
I'll just go down a couple pages with a few. Yeah, down. Keep going. RSI. And yeah, this is just another one. So this is weekly RSI. And yeah, it's the same similar thing. It's got your kind of logarithmic chart there almost. And it's signaling to you where RSI's bottomed out and where we were at that point in the cycle. You can see that very first one. It's very similar charts to the one we just showed you, but highlighting exactly the bottom of RSI, exactly the bottom of that cycle, and you can see at the point of which we're in at this cycle, we've completely bottomed out like the other two RSIs, and we're at that lower end of that channel. So
what would the price be if we hit that trend line?
It's around 20k, I think.
Yeah,
15
so,
20k.
Yeah, it'd be around 20k. I assume the bottom of those cycles probably show you the 80% retracement from that previous peak, so it would be around 17 to 20k at the bottom of that channel. So
it doesn't always hit it though, right? Like
no, it doesn't always hit it.
That middle one.
It goes back to my point there, stating that it doesn't. For us, we're not fearful that 28 or 29k might not be the bottom, and 20 to 22k is. What this indicates to us is either or.
We're near.
Yeah, we're near. We're either at the bottom or we're near. Yeah. So that's the confidence that I have reading those charts.
I think that's exactly what you want to reiterate there. It's just if you're looking at this, is Bitcoin more of a buy or more of a sell right now? Like it's more of a buy.
Yeah.
It doesn't matter if we're going to go down a little bit more.
Yeah.
And that's a
bullish average buy.
Yeah, exactly.
Yeah.
It's
which we've got the strategies in place for our members that we're executing as we go.
The key indicator is when you see the mainstream media say Bitcoin's dead.
That's exactly right.
Yeah, exactly.
I was going to say
buy
go
the
back
house
to 2020 and people will be buying a ton of Bitcoin.
Yeah.
So yeah, just moving on and kind of coming back to the Fed and the stock markets and talking about kind of inverse relationships beyond RSI. Did you, Tony, want to talk about the DXY?
Yeah, so I've kind of posted this chart to a number of people previously, just plotting the DXY against the price of Bitcoin. And, since Bitcoin since inception, Bitcoin and the DXY have been moving in an inverse correlation, quite a neat one actually. So every Bitcoin top and Bitcoin bottom coincides with the reversal on the DXY as well, which kind of makes sense. DXY, safe haven currency. When the economy is doing well, people take their money out of the DXY and put it into higher risk assets and so on and so forth. So, right now I've been watching the DXY for a major reversal. The weeklies are kind of leading the way and suggesting that there has been a reversal on the DXY. We haven't seen that reversal on cryptos just yet, but we have in the stock markets. We've seen that money coming out of the global safe haven currency, so to speak. and into risk assets again. But the DXY on the weekly charts had a major crossover on the MACD, RSI extremely oversold, a big bearish engulfing candle on the weekly charts, and a rising wedge breakdown. So, technicals are saying to sell the dollar, which would indicate that risk assets are going to recover somewhat over the next couple of weeks.
And it aligns with what you were saying earlier about interest rates looking like they're not going to hike them too much more. They can come to an end as well. I mean, that's what's pulling money into the US dollar, right?
Yeah,
if interest rates are higher, people are buying the US dollar to lock up bonds.
Basically, the market's forward-looking, so the DXY is priced in a number of rate hikes until the end of the year. Now, with GDP going down, China reported a large decrease in GDP, manufacturing data, retail sales. They had an increase in unemployment, so they're kind of like leading the global economy. Now, last week, the US even reported a decrease in GDP as well by minus 1.5%. So, with the kind of macroeconomic environment slowing down, that's going to put the Fed in a position where they may need to pause their rate hike cycle. So the market's now readjusting to the year-end projections. Yeah. So markets are coming down.
Just on that, I know it's not popular opinion, but I'm calling a rate cut at the end of the year.
Probably.
Well, yeah, it wouldn't surprise me, man.
Is there an election coming up?
Trump's going to announce that he's running again.
Yeah. But yeah, the Fed are pretty reactive. They're not proactive. So the Fed does what the market needs. It's not like they're trying to lead the market. Yeah, exactly.
I think maybe they might hold off and then.
I think it goes down to if you got to watch the latest breaking down the charts market analysis update. We got up that chart of the rates from 1970 to 1980, and what usually happened was they always give a couple of rate hikes in a row, and then it stabilizes where they don't do any for a couple of months, and then they always
a recession.
So what would obviously be most optimal is we know these rate hikes are coming in, say June, July, August, September, and then I don't know if it's going to be on that short a time frame, but maybe we come September, October, November, and they say we're going to halt the rate hikes, and then maybe towards the end of the year. Yeah. Once you've seen things turn macroeconomically across the globe, they begin to
pump the bags.
Looking at the charts you put up, Mitch, as well, that time frame coincides with like the bottom coming into the market in the next couple of months as well. So maybe we get a bit more downside going into the next couple of rate hikes, and then they kind of pause and the market takes a breather and starts to run to the upside as well. So
for sure.
Yeah, just kind of keep an eye on the rate hikes, but
So off the back of that, I think what we'll firstly do, just for BTC focus and discussing BTC's direction, we'll talk about a shorter time frame first. So if you could just find that descending triangle, Tony, I think it's down. There. So off the back of kind of this consolidation period of this price level, you can see those support and resistance levels there, and there's kind of a descending triangle forming out. And it's taken liquidity below Monday lows. It's yet to sweep Monday highs, and a new liquidity has been formed on either side. So essentially what this shows us is that it's going to break out of this, but it's just whether it's going to break out or break down. To confirm the direction. So, if a volatile move, as we discussed, that kind of 25k level it reached, but the 200-week MA is currently at 22k. There's a pretty general consensus around a lot of traders right now that we'll see that 22k level if we do break down. That's just the golden question. It's just whether we do break down from this support level to the next support level at that 200-week MA, that it usually does more often than not hit that, and usually responds really nicely to the 200-week MA. So as we've discussed, that there is a further downside target, which is approximately 17.7k, which is that 78% of the prior uptrend from March 2020 to November 2021. This would fall in line with prior bear markets, and it's 80% rough retracement. So just adding on to that, if you scroll up, Tony, just to the bear flag, we did post this bear flag up there. In our market analysis update, it's still consolidating in that kind of upward range, so we still could see a bear flag play out. Doesn't seem too likely right now in my mind because of kind of the weekend's price action and what's occurring, but still a large possibility to occur. So that's kind of short term, what could occur in the short term. But Will, do you want to discuss Wyckoff accumulation and that playing out in the long term?
Yeah, for sure. And it pretty much lines up perfectly with exactly what we're saying with these interest rates and what's going to happen towards later in the year. I mean, usually you wouldn't draw a Wycroft accumulation just off a simple copy and paste of a previous accumulation. But what doing that does do is it shows it in line with Bitcoin as a specific market's price action. So in the chart that's up right now, you might need to zoom in if you're watching, or Tony might better get it up a bit closer. Just towards the end there, you've got this kind of squiggly line that's going up and down. That's actually a perfect replica of the price action that happened in kind of June last year when the market dumped down from its 60k high. And that, what we were calling, as soon as that happened, and we were calling that it was going to be a Wycroft accumulation, and it certainly paid out exactly like that. So we've drawn that now, just on this extension, and right now it is following it quite closely. If it all does play out, we should see kind of later on, maybe August or end of July, we should see a bit of a dip down, which would take Bitcoin into that 24, 22k territory. If it recovers from there and starts to kind of push up, then we could see it break out. And essentially what's going on here is a Wycroft accumulation is, bigger institutional investors. They're deliberately pushing the market up and down to pick up Bitcoin at lower prices, sell it off at higher prices, and obviously increase the number of Bitcoin that they're holding. So that's kind of what we would consider our bullish scenario right now, is a Wycroft accumulation playing out. And it lines up with what we think is going to happen. We don't think it's just going to V-shape and recover straight away from here. We do feel like it's going to kind of keep bouncing in this, what can be a painful range, but nevertheless, it's better to understand the markets than try and kind of gamble on them. So, yeah, that's kind of what we're thinking of the bullish scenario. There's a lot more going on this chart. We explain it in heavy detail in our for our members area. If you want to get access to that, we'll probably leave some links in the description of this video.
I think it's just important to note on that, with all the institutional money coming in, all of the new crypto-related products that are tradable and investable as well, like, it's highly unlikely that this is going to be the end of crypto. It's like, you got to think about it long term.
Well, just think about where we went. We went to that fintech.
Yeah, exactly.
Do you know what I mean?
Yeah.
Like, that was done by Commonwealth, and like the irony being is they're the most centralised bank in Australia. But the point being, I think some of the things that I took away from that was like hearing them talk about crypto in a way where they're from, a conventional system, but they also understand it's, they've got to join us.
Yeah.
And I really thought that was quite cool, because the way that the lady that was talking on that panel at that Commonwealth thing, she was saying like, we want to get to a stage where everyday people are paying for things, but they're using blockchain and they don't even know it.
Yeah, exactly.
I think they're years away from that. Then also the other small thing that I picked up was that lady that was on the panel from Monash University, building the educational infrastructure and framework for the kids that are coming through. So I just thought, like, dude, like it's a no-brainer.
But these kids are now learning how to code on the blockchain.
Yeah,
cool.
Exactly. So
I might have to go back and do my master's.
Go back to primary school.
Exactly. So, and I think the other thing, just on that whole subject, it just goes to show, where we're going into the future. And obviously, Will and stuff are going to Texas, I think, next week. To attend another major event. So when you're in it firsthand, you see it, your conviction just becomes even more long term.
Yeah,
it's a different market to 2017. Where
absolutely.
Even as what I would say at the time, I was probably a more experienced, crypto trader or investor. You still had a thought, could this thing, be regulated, taken down?
Yeah.
It was in the back of your mind. Whereas now, there's just too much institutional involved. There's too much, support for it. There's too much realization.
We have a whole country running off Bitcoin now. So
yeah, exactly.
Monstrosity if Bitcoin went to zero for them, but
literally,
future is bright.
Yeah, exactly.
It's always the name of the game in bear markets. The number one and number two things is resilience and patience. So, and this is where the money is made. So. We'll have strategies in place always.
Yeah, absolutely. Is there anything anyone else wants to comment before we start to kind of wrap up?
If you want to buy some miners, hit me up.
We'll have links available and stuff. And as always, can contact any of us about any questions or queries that you have about miners. You can contact Taylor about what's happening with the Trading Academy and any deals we have going on there. And any other questions you can ask.
If there's any topics you want us to discuss in the crypto space, just drop us an email as well. We can try and find some information out and raise it in the next podcast.
Yeah, so what we will do is, we want to educate our members before they're investing, whether it be in mining, whether it be in trading. So we will put the link to speak to Theo for the mining, speak to Taylor for the trading, even if it's just to have a chat about where the market is at and if it's something that does suit you. I mean, we're pretty honest. We tell people if we don't think it's right for them, if their expectations are way out of line and they're just looking to make a quick dollar, it's not really the market for you. So book that call, get educated. Maybe it's something for you, maybe it's something it's not. But yeah, we're going to do this next week as well. It came together because we do this every week. It's great information and we thought, why not give it to our audience? So hope you guys enjoyed it. Leave a comment if you want us to discuss any particular topics, and look forward to seeing you next week.
Cheers, guys.
Thank you.
Cheers.